Good afternoon, this is Connor from 0DTE Traders here to present our market minute for February 16th, 2024. It is 12:30 and the SPX is trading flat to 50.32. We did see some initial weakness in response to a hotter than expected PPI print. This was probably OPEX induced as well. However, the market bounced off 5,000 and, well, we've been trending higher ever since. Now back to the previous session's high of 50.35. A break does open the door to the to the call wall zone at 50.50 and 50.55. That's the SPY call wall equivalent. Now, we were dip buyers here yet again today. Reason being, the trend is up. We are in positive gamma and trading above our flip of 49.45. We have a simple rule, and if you just follow this rule, you'll make good money over time. Above the flip, buy the dip. Below the flip, sell the rip. The flip is essentially our transitional strike. Above, bulls are in control, flows are supportive. Below the flip, bears are in control, flows are destabilizing. Now, we've been over the flip here, well, really for the past 2 months or so. Now, we did have a little hiccup here on CPI day, but over the past 3 trading sessions, we've been above the flip and we've been buying the dip. And our process for timing that entry is quite simple. We utilize gamma levels in conjunction with our DSS cycle indicator. And when they line up, that's a dip buy. We picked the low here on Wednesday, coming down to major support zone, 5-minute cycle low, and we pinned our 5,000 strike. In addition, yesterday, same setup, 5,000 support, 5-minute cycle low, nice market rally. And today, same setup, same level, 5,000 as support and 5-minute cycle low for a move higher. Literally picking the low 3 days in a row. Now, that's not uncommon. Our indicator, our key levels tend to pick turning points in the market. This is another visual looking at SPX notional gamma, and we can see how significant that 5,000 strike is. But most notably, all strikes above 5,000 are positive, which indicates support for the market. Whereas if you break below 5,000, it would be a bearish indication entering this neutral zone from about 5,000 to 49.50. You can see it's just kind of mixed here. You got some green bars, some red bars, and kind of no man's land. No one's in control at that point. And then you got 49.45 is our flip, transitional strike. Below, all strikes are negative, and this is where you'll start to see some material negative gamma and a potential regime change from positive gamma to negative gamma, which is going to require a different playbook. Essentially the opposite of what we're doing now, right? So as highlighted, we're buying, right? We're above the flip, so we're buying these dips. When we are below the flip, we're essentially selling the rips, right? Playing the cycle highs. Also, I should mention that these levels are subject to change, so it's important to make sure you're checking this on a daily basis, see where the total market gamma is, see where the flip is, and the support and resistance levels that are in play. Let's do a quick performance check. I'm ending the week up $7,110. I took a total of 9 trades, 8 winners, 1 loser, and I'm up about, over 33,000 on the year, win rate 81%. I had some decent trades here, particularly to start the week, Monday, Tuesday, favoring the downside via long puts, 500% ROI, 330% ROI, and then Wednesday, Thursday, Friday, in that buy the dip regime, where I traded long calls primarily, 160, 150, 170% ROI. Took a couple butterfly trades in here, just some small risk. Small profits on them, nothing to write home about. But overall, solid week. And my P&L curve has been quite consistent here to start the year. Nice and upsloping. I've had a couple periods of just sort of flat performance, but no major drawdowns yet, right? It's inevitable. I'm going to have a drawdown at some point throughout the year, but as long as the overall trend stays up, I keep the risk managed, we should see some nice returns this year. I've been trading mostly single options this year, right? Long calls, long puts. which is a bit of a change of pace from last year where I was focused primarily on credit spreads, butterflies. Now, the reason I've been attracted to single options is because of the attractive risk-reward ratio, the lower commission costs relative to a butterfly, tight bid-ask spreads. Overall, I find it much easier to manage the risk. If I'm wrong, I can cut the trade early. I can pivot directions. Now, single options, 0DTE single options specifically, are not without their drawbacks. Theta decay can be a major problem. However, if timed properly and you're conscious of the Greeks, I find it an easy hurdle to overcome. Now, all of my trades here are posted in real time in our Discord, or I trade these on live stream. However, you don't need to rely on copy trading. We actually teach you how to trade, setups, position management, market dynamics, etc. And our team is very consistent. We conduct a poll at the end of each trading day. This is from Monday of this week, Tuesday, Wednesday, Thursday, and Friday. So if you want to join the team, learn a repeatable process to generate consistent profits trading 0DTE options, we have a special offer for you. Use the coupon code 0 at checkout and receive 20% off our quarterly subscription. Offer valid until February 21st, 2024. One time only. Hope to see you soon.